please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Trading Hour this Thursday morning. I'm Prashant Nair. With me is my colleague Ekta Batra. The markets are absolutely flat. I mean, it's actually been a pretty decent week so far. We are up about, 1.6% for the week compared to last Thursday to yesterday's close. Today being the last day, tomorrow is a holiday, and today being the expiry as well, I think it may get interesting. So, fingers crossed. Action may pick up, especially in the second half of the day, as we've seen happen on past expiries as well. But through the course of the day, there'll be enough and more to track in terms of earnings. Globally, the big talking point has been what's been happening with the US dollar, which continues to go lower and lower. So far, other risk assets aren't seeing that impact. Be it other currencies, big global currencies or stock markets, there isn't very much by way of any sharp impact per se. Ekta, we're going to start with the Mphasis results.
Yes, absolutely. In fact, Mphasis is in focus. So let's cut across to the management. Rukmini Rao, my colleague, caught up with them.
Firstly, revenue is always good to impact margin positively. Plus, we've also been working on operating efficiencies in the business. We talked about it over the last 2 quarters as well. And most importantly, we've been able to absorb a number of headwinds, soft quarter, wage hike, and the primary contributor really, in addition to the operating efficiency, is also the fact that we've been constantly focusing on increasing the percentage of fixed price. So that has actually dramatically gone up this quarter compared to last year.
Sure. Surya, if you could actually break up the margin improvement for us.
Yes. So as Nitin mentioned, various factors are contributed for this good margin. One, of course, is the operational efficiency, including the business model. And 2, also the revenue growth has helped us in terms of the economies of scale.
Sure. Nitin, I just want your commentary on the BFSI sector. Doing pretty well for you. What is it looking like going into the next quarter and, of course, FY, the next financial year?
I think, again, this is the start of the year, so we'll get a better idea of the budgets, over the next few weeks. And I've also been pretty consistent over the last 2 or 3 quarters in talking about the BFSI segment. I think at an overall segment level, it's hard to say that spending will increase across the board. But in pockets where we know that enterprise clients are very, very keen to invest, whether it's innovation, consumer-facing tech, customer-centric analytics and data, personalization, application of AI and automation, I think those areas are seeing robust uptick. So as such, that is actually helping us grow that part of the business really, really robustly. I also think there'll probably be some positive impact of the tax cuts on that segment as well, because that's a pretty big tax windfall. And I think some of that will come back into investments in strategic areas.
Sure. Surya, we've just seen a very slight dip in the utilization rate. Is it just the softness of the quarter, the furloughs that have really impacted?
Yes, you are right. And the softness of the quarter has contributed to the utilization, but we are confident that it will pick up in the next quarter.
Sure. Also on the currency front, really, you seem to have got some bit of advantage of that. Do you really think that this is sustainable?
And we follow a very, documented hedging policy, and that has helped us. And we are confident with the policy which we have taken will help us in the coming quarters.
Sure. So, also given the fact that in terms of your you've of course given salary hikes going forward, is that impact going to go into the next quarter as well, or the entire thing has been absorbed? The salary increase was effective 1st of October, so the whole impact has been absorbed in Q3 itself. Sure. Nitin, just want to get your own sense around, the initial talks around the client budgets. What is it looking like? And also, there's a lot of noise that we heard in the last couple of months or so around the H-1B visa as such. What is really the impact, or what's your own reading for now?
I think on the budget side, as I said, it's still a little early, but my sense is in the right areas, we'll probably see an uptick in spending. Clients have.
Okay, so margin improvement coming in for Mphasis this quarter, but Kiran Mazumdar-Shaw has begun speaking on the Biocon numbers. Let's cut across.
Our Q3 earnings and our year-to-date earnings for fiscal FY18. Let me start by saying that we've had some significant developments this quarter, which have already been shared with you. The first being the US FDA approval for our biosimilar trastuzumab asset, which we have partnered with Mylan. This is certainly a big milestone for the two companies, as it is the first biosimilar trastuzumab to be given accorded approval by US FDA. The second big milestone announcement that we made was our strategic partnership with Sandoz for developing the next wave of biosimilar products for global markets. Now coming to numbers, this quarter we have basically delivered a top line of 1,092 crores, and if you look at the operational numbers, these are at 1,058 crores. This is a pretty flat performance when it comes to both Q3 and our 9-month reported numbers. Having said that, last year we have also had the benefit of very large licensing income which did not flow through this year. So at a PAT level we have seen a significant decline in our profit after tax. This year we've reported 92 crores as compared to last year, where we had the benefit of a large licensing income that we had with respect to our biosimilar trastuzumab asset that we licensed with a Brazilian company, Libs Pharma, and that actually boosted our profit numbers to 171 crores last fiscal. Now when you look at EBITDA, this has also declined significantly compared to last year. It is now at 256 crores. And if you look at our EBITDA margins, although the EBITDA margins are at 22%, if you look at core EBITDA margins, which is net of licensing income, Forex and R&D, it is at 27%. And at a 9-year level, it is at 28%. So, if you look at our R&D spends, again we have registered R&D spends of 94 crores at a gross level, and at a P&L level it is 53 crores because we have a capitalized 41 crores based on our various biologics program. Compared to last year, of course, we have seen a decline in R&D spends, but that is not indicative of what the future holds for R&D investments.
Okay, so that is Kiran Mazumdar-Shaw talking about the Biocon numbers. The margins have been impacted this quarter because of a lower licensing income on a year-on-year basis, and they have also spoken about the R&D spend going forward. We will well, that is Ramdev Agarwal of Motilal Oswal, who's getting ready to address the press in terms of the numbers that they reported. It did come out during markets yesterday, and there are some worries in terms of the housing finance or the housing subsidiary performance for Motilal Oswal, especially with the gross NPAs rising on a Q-on-Q basis. So I think that is probably worrying the street at this point in time. So commentary with regards to the housing finance subsidiary will be keenly watched for Motilal Oswal. Otherwise, the broking business did very well on a year-on-year basis, as well as the overall parameters. But it is that subsidiary, the housing finance subsidiary, where I think the gross NPAs have risen to around 4%, which is hurting the stock. I think we can cut across now. Well, in just
Good morning,
a couple
friends.
of seconds. Yeah.
I am very delighted to declare the Q3 result, which you might have seen in the newspapers today. We have had a very good quarter in Q3, and all the capital market segments, they have been really robust, whether it is broking, institutional as well as retail, iBanking, then we have our wealth management, then finally the asset management. So all the businesses we have grouped these businesses into 4 categories in Motilal Oswal. First is the broking and the conventional capital market business. So there in retail business, retail as well as in institutional business, the cash volumes have really picked up very well. So our market shares are all-time high, and the brokerage rates were stable. So in a rising market and rising volume, you get disproportionately large revenue gain because of the market share gain and change in the mix more towards cash volumes. Second, the broking, the B&D, what broking and distribution, has become more distribution and broking, where actually the third-party products, the investment products like mutual funds and PMS, that distribution has picked up very well. And actually it is changing the complete business model, and it is becoming incrementally more distribution-based products, distribution-based revenues. So that has been significant change in the business model and revenue also, and has huge impact on the bottom line. Investment banking, we have concluded 11 deals in this quarter. So I think one of the most surprising part of the entire capital market business is the resurgence of capital market deals, where earlier the sellers were not willing to conclude the deals quickly, but today at the very high levels of the market, buyers, of course, they want to buy into the assets, but the sellers are also are pretty happy to conclude the deals because the price they are fetching is very good, very attractive. So investment banking is in full flow, and it has grown almost 100% or a little more than that year over year. All in all, this entire capital market business, where it is broking and distribution, that has grown by close to 100% year on year. Then comes is the asset management, where the growth has been quite significant in terms of AUM build-up. The AMC net sales is actually, we have completed this year's target of sales in just 9 months, and the sales is actually up about more than 100%, and we have crossed AUM of 35,000 crores of pure equity. We don't have debts, so very little liquid fund, but basically it's entirely pure equity asset management company. So that's about 35,000 crores, which is kind of one of the best quick build-up in last 3-4 years. Actually, we are about among the domestic AMCs, we are about ninth largest equity managers between PMS and mutual funds included. So we manage about 35,000 crores, and we know there are 8 or 9 bigger managers ahead of us. And wealth management has also picked up along with mutual fund, and here because of the combined might of good asset performance and good distribution, the wealth management build-up has also been pretty rapid, and we are signing in a lot of clients, because equity-oriented the deals and equity-oriented asset management, that is what the clients are appreciating now, and our positioning is that of very strong in equities. So we are saying very sustained inflow of the client in wherever they want more equity part of their assets. Then comes the more difficult part of the business, this third genre, that is the housing finance, and that has not done too well in this quarter. We had, we had been telling you in the past that we are, because we didn't have good collection organization, so though we grew very rapidly, but after demonetization, so the book has grown by 48% in year on year, but the stress on the NPA, stress of NPA, and our urge to provide more than what is the regulatory requirement, that is what is kind of keeping the profit at low level. And we said, whatever is the profit for the quarter, let's build up the provision. And hence, for this quarter, the declared profit is 0 compared to whatever was the profit, I think 17 crores last year. So that has actually changed the entire, bit of drag on the profit growth because of the housing finance, over 17 crores last year, 0 this year. So that's a degrowth of 100%.
Well, Sudarshan Sukhani is now with us to tell us what he's strategizing today. Sudarshan, well, in the midst of earnings season, so we apologize, a little late today in terms of coming to you. Nifty call as well as in terms of stocks.
Yeah, see, the Nifty is now weakening from yesterday's narrow range. That tells us that the markets are not willing to go up, at least not today. So the trade now is to close your long positions and step aside. This applies to both the Nifty and the Nifty Bank. So at this point, we should be out of the market. Individual stocks keep on offering opportunities. I have opportunities mainly on the buy side, which is where the market is. It's only 50 points lower than its all-time highs. So consider buying Ajanta Pharma. Pharma is doing rather well today. It's not just Ajanta Pharma. Other stocks are also doing having upside momentum. But today's selection is Ajanta, and Dabur from the FMCG pack is also a buy. Try to keep these day trading buys because we have a 3-day extended weekend. So we might as well take it easy. And finally, the third in my list is also a buy, PVR. PVR has gone through a bear market of its own. That bear market is now ending. So not only is it a day trade, it's also something that positional traders willing to hold positions can consider. So Ajanta Pharma, Dabur, PVR, all for buying.
Sudarshan, thanks very much for that. Appreciate it. We speak with you soon again. Kiran Mazumdar-Shaw is CMD of Biocon, and she's now joining us to discuss the third quarter numbers which were released earlier. Ma'am, thanks very much. Good morning. It's a pleasure. Prashant this side. Could you first up detail the performance in small molecules, biologics, branded formulations, research services? I mean, what stood out to you? What do you want to highlight in these four categories?
Well, you know, I think we've had a fairly challenging quarter, and I had already, shared this with you the last quarter, saying that we expect to see a revival in Q4 onwards, because we have been challenged with certain requalification activities that has seen a challenge for us to really boost our biologics business, which we now expect to revive from Q4 onwards, since we've addressed most of those requalification issues, and we are back on in terms of full production. When it comes to, so many of our emerging market opportunities have had to be denied for a few quarters, or at least, scaled down for a few quarters. So now in Q4, we will start seeing better performance. In terms of our small molecules business, certainly we have been impacted by the channel stuffing, and also from a lot of the very highly competitive landscape that we're seeing in countries like the US, where there is fierce price competition, which has certainly affected us as an API supplier. But having said that, we've also seen some good performance of some of our segments. Immunosuppressants have done extremely well. And we've also entered the US with our own finished formulation generics, and that over time is going to offset some of the challenges we are witnessing in the API segment. So again, whilst we've seen a decline in our API small molecule business, compared to last fiscal, and even if you compare it on a 9-monthly level, there has been a 11% decline in our small molecule business. We do expect that some of our finished formulation generics will offset it starting Q4. Biologics, we definitely are confident we'll see a recovery from Q4 onwards, now that our facilities are back on track. We expect more regulatory approvals from US FDA and EMA over the next 12 months, which will also then allow us to basically be much more confident of our biosimilars market opportunity going forward. And when you look at research services, they've had a very smart recovery, a 17% improvement in revenues, and they expect to basically end the year on a strong double-digit growth. So this business, we believe, is now back on track, has a strong visibility in terms of what the future holds. It has just signed some long-term contracts with its anchor clients like BMS. It has expanded its partnership with Amgen, and it is looking to actually enroll more large customers. So all in all, I think our research services business, our biologics business is doing extremely well. Branded formulations led by UAE is beginning to do extremely well. And so overall, I believe that from Q4, you will see a recovery mode, and then going forward into fiscal FY19, we expect to see a good performance.
Okay. Mrs. Shaw, hi. Thanks very much for joining in. You know, there is some concern which has come in on the margins this quarter. Everyone expected a higher interest as well as depreciation cost. But I think the concern is about what exactly the margins would look like going forward. You would probably scale up your R&D expenditure because of your tie-up with Sandoz, and you have these fixed costs continuing for your Malaysian facility. Can you give us a sense in terms of where exactly margins would stabilize, ballpark figures?
So if you look at, you know, the core margins, I think you will see that at a core margin level, we are sustaining it at the 27-28% levels, both at a, you know, Q3 level, Q3 basis and at a 9-month basis. Now, this, when we talk about core margins, we are really talking about, you know, margins net of licensing income, net of forex gains, and of course net of R&D. So if you look at that business, it's, those core margins, they are fairly sustainable and they have been sustained. I think what you are really seeing as a sort of a decline in margins this quarter to 21% is largely on account of these fluctuations. You know, some quarters you see a drop in licensing income. As you know, licensing is a very lumpy business. That basically then sort of impacts our margins. And then of course you're also seeing, as you very rightly said, the impact of Malaysia. And you know, the impact of Malaysia is only going to go away when we start addressing the bigger markets. I'm pleased that we just received a regulatory approval for biosimilar glargine in Russia, which is a very large emerging market. We have also, you know, seen a good uptake of glargine in the Mexican market. We are hoping to receive a positive, favorable response from EMA for our insulin glargine. So once we start looking at those kind of opportunities, I think the capacity utilization in Malaysia will improve, and the impact of depreciation that we are seeing and operating costs that we are seeing from Malaysia will then start reducing. So I think next fiscal you will see a much better improvement in these kind of impacts.
Okay. You have announced a business transfer agreement a couple of days ago with regards to your biologics business, and you have mentioned that there could be some amount of monetizations of the biosimilar business that you would consider, which would include probably listing. Can you give us a timeline in terms of when we could expect this, and would it only be listing because you have a couple of interested parties, the likes of Mylan and Sandoz? Would you be open to probably say sell some stake to them as well?
Well, I don't think I want to make those kind of comments, but I would like to say that we believe that our biologics business is a large value unlocking opportunity for us. And as you know, we've actually you know, entered into this partnership with Sandoz, which actually requires Biocon to basically enter into an end-to-end development responsibility, which will obviously mean a greater R&D investment. And you know, given that we are going to expand our biosimilars pipeline, both with Mylan and Sandoz and beyond on our own as well, we believe that, and as well, and if you factor the novel biologics pipeline that we are also developing on our own, I think you will see that there will be a need for capital injection. So it will be a dual sort of objective of listing Biocon Biologics in the foreseeable future, to basically unlock value and to raise capital to address some of these capital needs that we have in R&D and in probably you know, capital investment in expanding some of our manufacturing facilities. So I would say that, you know, we will be addressing this opportunity over the next few years. We don't have any optics on exactly when that will be, but certainly, as I said, in the near term, we will look at a listing of Biocon Biologics.
Okay. Mrs. Shaw, you know, just leave us with some thoughts on the biosimilar business. One, when can we expect the European regulators to probably re-inspect the Bangalore facility? As well as what might the update with regards to pegfilgrastim as well as insulin glargine be in regulated as well as developing markets?
Okay, so we have basically, informed EMA that we have completed all the various requalification activities, and we do expect to be re-inspected very shortly. In terms of peg-fil-grastim, as you know, we received a complete response letter. We have actually responded to that, and again, I think we expect a response from US FDA in terms of what next. In terms of the insulin glargine, as I mentioned earlier on, we do expect a positive response from EMA in the near future, and with that we will be able to basically then get ready to enter into the European market with our insulin glargine. We have also commenced a phase 1 study for insulin aspart, which we have also partnered, as you know, with Mylan as the next biosimilar insulin analog. So there's a lot of activity taking place in all these areas, and we believe that we are well on track to get a lot of these approvals over the next 12 months, because as you know, even in the complete response letter in peg-fil-grastim, there were no scientific issues. I think it was more to do with some of our manufacturing requirements which we have responded to.